Hi, Tim Biggam back again this week for Traders Exclusive, and what a week to say the least so far. You know, the deal or no deal, certainly the deal came through. It's kind of the market's telegraphed, you know, starting with late Tuesday, the rally into today. So certainly the VIX has been even a bigger story. The market's still not making new all-time highs, although knocking on that door, but the VIX getting absolutely hammered yesterday and a continuation a little bit today. We saw the biggest drop in the VIX in many a year percentage-wise, as everything that was bid up pre-deal was actually slammed down post-deal. So all that protection was quickly unwound in a day or two, and I'm actually looking at that to be way overdone in my opinion. I'm looking at a bunch of stocks out there that had some bad earnings and revenue numbers, the big banks, especially names like JP Morgan and Citigroup, really looking out to December and buying some very comparatively inexpensive puts on Citi, buying the 5250 puts. The stock's at about 50.40 last I looked. Those are trading, you know, just barely over parity. Actually, no hardly premium on all. I'm selling front month out of the money 50 puts against that kind of a diagonal calendar spread, just to position for at some point a pullback. Citi missed badly on revenues and on earnings, even though they brought a bunch of stuff forward. So to have the stock rally up like this is a little counterintuitive to me, and with options so cheap, I'm willing to take a shot here. Same thing with JP Morgan. Obviously, they set aside a ton of money for legal reserves. They also did miss on the revenue side. So all the big banks, Bank America as well, all missing on the revenue side, which is really the only clean number you'll ever get from a bank. So buying some puts that are trading at the lowest implied volatility level we've seen really since pre-financial crisis on a lot of these names. So the fact that they're pushing towards all-time highs gives me a little comfort as well. I think that probabilities might be 50-50 on an up or down move, but the magnitude of the downside will be more sharp than to the upside. So I like that kind of asymmetric payoff that I get here by buying some puts. A name that I kind of like post earnings is IBM. The stock got creamed as it missed again on the revenue side, and pointed out that the BRIC nations are the big sign of weakness here. So the stock trading about 176, down about $11 post earnings. I'm selling some November 170, 165 put spreads. Sold some right on the opening for a nice price, and adding some more as we trudge along here. So bringing about $1.20 net credit on that. I'd be a willing buyer of IBM anywhere below that 170 level. And going forward, I still think that this market, now that we're done with, you know, the calamities out of Washington, not done, but more postponed, earnings are coming out, to say the least, tepid at best. You know, we had earnings estimates already being tooled down dramatically. You know, looking for about 3 months ago, 8 to 9% earnings growth. Now we're looking at maybe 3%, but yet the market has rallied sharply in that time frame. So I'm still a believer that ultimately fundamentals matter. Janet Yellen getting the reins from Bernanke, you know, keeps that free money parade mantra going, and that's really the yin and yang here. How high can this market go on free money versus how high will they take it on valuations? We're pushing towards 16 on a forward multiple for 2014, if you believe, you know, about $1.08 in earnings, and those are coming down. So, you know, 16 is not inexpensive, to say the least. Historically, it's actually very expensive. So I'm still not a believer that stocks are the only place to be. I think they do have to start making some money and not keep fabricating earnings out of, you know, stock buybacks and the like. So until next week, this is Tim Biggam. As always, keep your position sizes accordingly and those stops in place. Take care.